after having seen a resilient quarter coming in from most of the BFSI players, it's time for Indusind Bank results. Well, in terms of the profits, ET poll does suggest that Indusind Bank would be reporting a healthy profit growth of 170%. Profit is seen at 840 crore versus 300 odd crores in the same quarter last year. We should be expecting slightly subdued kind of a growth in terms of the net interest income. It's seen growing 7% on account of relatively subdued loan growth. However, margins may still remain stable anywhere around 4 to 4.1%. Commentary in terms of the entire impact of the COVID second wave, especially on the microfinance portfolio as well as on the commercial vehicle portfolio, would be fairly important, because Indusind Bank has a large presence in both these segments, and industry players do suggest that yes, there is stress right now on account of the COVID second wave, especially in the MFI book, in the unsecured book, in the informal segment. So hence commentary here would be keenly watched out for. Indusind also has good amount of presence in the commercial vehicle segment. Commentary here from the management will be important to understand how the infrastructure activity overall in the economy is shaping up. Overall, credit cost is likely to still remain fairly high. Some of the analysts are penciling in slippages to the extent of 5 to 7%. Provisions may still remain high during the quarter. It may rise on a sequential basis. Overall, loan growth is seen at a modest pace, sub 10% growth is seen. Some of the analysts are penciling in loan growth of anywhere between 3 to 5%, as in the very recent business update of Indusind Bank, they did report that their loan growth has risen by nearly around 3%. If you look at the deposits, deposit growth is fairly strong. It's seen at 27%. This is a fairly good sign, because it does provide comfort to the investors that after the recent events, Indusind Bank is able to mobilize good amount of deposits, and this surely is a very good sign. In terms of the stock data, well, the stock has definitely underperformed the Nifty Bank on a YTD basis. It is up close to around sub 5% on a YTD basis versus Nifty Bank, which is up 6.6%, and Indusind Bank is up just around 2.7% on a YTD basis. It is down, of course, close to around 4% in the month of April, but if you look at the stock on a 12-month basis, it has been the third best gainer on Nifty Bank. So from that perspective, yes, the entire commentary of the impact of COVID second wave would be fairly important to understand the trajectory of the stock from here on. Most of the brokerages to maintain buy stance on Indusind Bank. Macquarie has an outperform rating of nearly around with a target price of 1,100, and the stock is trading at 1.3x FY23 price to book and 1.5x FY22 price to book.